Hey everyone, welcome back to the channel. Today we're going to talk about precious metals and 3-time tested best practices that stackers frequently ignore when managing their physical gold and silver assets. And it's worth revisiting as we're flirting with the prospect of entering price discovery for gold and plan for what comes next. Before we begin though, none of this is financial advice because I am not a financial advisor. Creating or updating a portfolio management strategy should never be taken lightly, and without the assistance of an advisor who is familiar with your personal circumstances and objectives. And with that out of the way, let's jump in. Price discovery is a critical time for any investor, including physical gold and silver stackers. Price discovery is the time when only the market is there to determine the fair value of an asset through the unadulterated interactions between buyers and sellers. Simply, an asset becomes worth what someone is willing to pay for it. And for a moment, every holder of that asset is in profit, at least on paper. This period can be marked by volatility and uncertainty, making it essential for stackers to adopt hardened portfolio management practices. However, some time-tested best practices are frequently overlooked. They're really the foundation on which a portfolio is built, leading to suboptimal investment outcomes. One of the fundamental principles of sound financial management is maintaining an emergency fund. Boring. Yes, I know. But many investors, especially those focusing on physical assets like gold and silver, often overlook this crucial practice. An emergency fund provides liquidity and financial security, ensuring that stackers are not forced to liquidate their precious metals holdings during unfavorable market conditions, thereby preserving their long-term investment strategy. That is all fine and good, but what if you're naturally inclined to be a horrible saver and an emergency fund is a challenge to build? For these folks, a well-curated stack might be the best option for building an emergency fund. I'm actually fine with this method, with a few constraints. First, building an emergency fund by stacking precious metals is a tactical decision, and over the long term, stackers need to build a layer of liquidity between life and your precious metals, because saving in precious metals inherently comes with a number of risks in the best of circumstances that only time can account for. Second, an emergency fund built on a foundation of precious metals requires standardization to facilitate quick liquidation. This means putting away only the most liquid forms of metal you can, things like government bullion and possibly generic buffalo rounds. Nothing with numismatic value, nothing collectible. The more unique the item, the more difficult it is to sell. Keep your stack simple, easy to divide, and highly liquid. Otherwise, stack cash before metals. Regular portfolio rebalancing is another time-tested practice that is often ignored by gold and silver stackers. Concentration of any one asset in your portfolio is a tricky needle to thread. On one hand, if you only have one egg and one basket, it's easy to keep an eye on things, but you're shit out of luck should that egg break. So what is rebalancing? Rebalancing involves periodically adjusting the composition of an investment portfolio to maintain the desired level of asset allocation. This practice helps manage risk and ensures that the portfolio remains aligned with your financial goals. Generally, by regularly rebalancing a portfolio, you can manage risk, lock in profits, and maintain a disciplined investment strategy, ensuring that holdings in physical gold and silver contribute optimally to their overall financial goals. But what does this really mean day-to-day for the physical metals stacker? The practical answer is you settle on the allocation to physical metal that is appropriate for your particular situation and you stick to it. For me, that is a target of 5%. I'm currently under that amount, so I continue to add until I hit that 5%. Of note, there is no way I'm holding 5% of my net worth in physical metal and keeping it in my home. I split that between physical metals under my control and the rest in a trust managed by Sprott that is backed with physical, is stored with the Royal Mint of Canada, is audited regularly, and most importantly, convertible to physical on demand with a few stipulations. For me, this is a much better option than paper-backed exchange-traded funds like the GLD. Additionally, rather than buying and selling assets to bring my portfolio back in line, I use contributions to rebalance. Rather than selling and potentially creating a taxable event, regular contributions will gradually restore balance to the whole. Which brings us to our next best practice: understanding cost basis and your exit strategy. Understanding your cost basis and having a clear exit strategy are critical aspects of portfolio management that are often neglected by stackers and investors alike. Your cost basis is the original value of an asset for tax purposes, and it plays a crucial role in determining capital gains or losses upon sale. I know that precious metals appeal to folks who see an asset like gold as private money, and I tend to agree. Regardless of how I feel, though, I plan for and pay my taxes. The alternative isn't worth the potential pain. This means keeping records with a level of sophistication that is appropriate for your situation. A notebook, a spreadsheet, an application, just have a method and manage it consistently. Your holding time might be forever, but you should still have a plan to sell. This means knowing who you'll sell to, how you'll sell to them, the payment method, and where to safely put your proceeds. I've met all kinds of investors who had a knack for getting into an asset, and they have zero idea on how to sell many times because of fear of realizing a profit, be it for taxes or missing out on further gains. The issue with this method, though, is that there is a higher than average chance of round-tripping that profit into loss over time. While common portfolio management practices such as diversification and risk management are well known, some time-tested strategies are often overlooked by investors in physical gold and silver. Maintaining an emergency fund, regularly rebalancing your portfolio, and understanding the cost basis and exit strategy of your positions are critical practices that can enhance portfolio performance and financial security. By implementing these often ignored best practices, stackers can better navigate the uncertainties of price discovery and achieve their long-term financial goals. Let's call it for now. Good luck out there, and be ready for price discovery in precious metals. Cheers.